In all these questions, no, honestly, it's very difficult for me to be writing shorts also. For few questions I have done whereby I think there is something new. For many questions I have not done because it's not worth it. Okay, so these questions are just applications of the few concepts that we all had done in the beginning. Now, for question number 13, no, just one thing and I'll help you in the further questions also. See, if suppose in any question, no, you are ever given fixed cost per unit is rupees 4. Then obviously this 4 must be nothing but absorption rate. Fixed cost is never ever per unit. It must have become per unit in this particular case because we must be following absorption costing. This data is useless. Why? This rupees 4 does not mean that whenever I produce 1 unit, I incur 4. If you all remember our conversations from last 2 months, you will start to realize it. So this 4 only means one thing. Whenever you produce 1 unit, you charge rupees 4 in your books of accounts. I have only used the word charge. I have only used the word absorb. You don't pay fixed cost unit by unit. Correct, no? Whenever I produce 1 unit, I don't incur rent. I don't incur salary. These are lump sum costs here. So this data is always useless. It is always useless, but not completely useless. Why? Because from here, I can try to get some other data which might be useful. What data? This rupees 4, whenever company might have computed, they must have done BOH upon BLA. Suppose when they computed this rupees 4, no, they thought that company will be producing 20,000 units. Can we say that means fixed cost that the company must have thought it will be incurring is nothing but 80,000, no? Now, this data might be of some use to you. This is your fixed cost. This is not fixed cost, beta. This is absorption rate of fixed cost, which is useless. So, if ever absorption rate is given to you, try to arrive at the total figure. And then in that particular case, try to be thinking in this particular case, how can this data be of some use to you? This data will be of no use to you. Let us start. This is question next one. Question number 13. An umbrella manufacturer makes an average profit of 2.5 per piece on a selling price of 14.30. Okay. By producing and selling 60,000 pieces or 60% of potential capacity. Okay. So there is a company that makes average net profit of 2.5 per piece. Even that data will not be of much use because profit is not per unit. Okay. On selling price of 14.3. By producing and selling 60,000 pieces or 60% of potential capacity. Can you say their potential capacity must be 1 lakh units, no?
Yes, sir. Yes.
But currently they produce and sell 60,000. His cost of sales is as follows. Direct material, direct labor. Works overheads 50% variable. Sorry, 50% fixed, so 50% must be variable. Sales overheads 25% variable. Okay. Now listen. For direct material, those guys have not written what part is fixed, what part is variable. So tell me, direct material will be
100%
variable. Direct wages will be
100%
variable. Okay, these are common sense things here. These are direct costs, no? If you want to do for time pass something, you all can take the selling price, subtract all these costs, you should be getting 2.5. Just try that luck once. Okay, further. Now see, works overheads 6.25, 50% fixed. Can you say 50% fixed means 3.125 fixed? Okay, can we say 3.125 will be variable over here? Okay, 3.125 fixed. Now, whatever portion is fixed, you all tell me now. Can you say this 3.125 must be absorption rate? This absorption rate must have been found out in reference to dash units. 60,000. So if you back multiply, do remember this is your fixed cost. Okay, 3.125 is not your fixed cost. That's absorption rate, beta. Okay, this is your fixed cost. Further, now this data was of last year. Last year is over. Now current year. During the current year, he intends to produce same number of units, but anticipates that fixed charges will go up by 10%. And direct labor and direct material will go up by 8% and 6% respectively. Okay, so this year obviously he wants to be producing same number of units. Same number of units means how much?
60,000.
60,000. But his fixed cost is going to be going up by 10% and DL and DM will be increasing by this much. But he has no option to increase the selling price. So can we say selling price will still remain 14.3?
Yes.
Okay. Now listen very carefully. Under this situation, he obtains an offer for further 20% of his capacity. Now all these things were supposed to happen to him in this particular year. Suddenly he has got an offer for 20% of his capacity. He got an extra offer for 20% of his capacity. Can you say his capacity was 1 lakh, no?
Yes.
So he has got an extra offer for how many units?
20,000.
20,000. Can you say this year he is going to be producing 80,000 now?
Yes, sir.
60, that in any case he was supposed to be producing plus 20 more. What minimum price will you recommend for the acceptance of the offer to ensure the manufacturer overall profit of 167,300? Those guys are saying, what minimum price will you recommend for the acceptance of the offer? Obviously you all will understand. Offer in this case is only of 20,000 units, no?
Yes, sir.
For now, one thing, do you all get this, that now you have to be computing selling price for the offer, that is for 20,000, because the rest 60,000 he is going to be still selling at 14.3.
Yes.
It was given to you, no? He does not have an option to increase the selling price. Okay, so therefore 60,000 units he is going to be still selling at, speak, 14.3, and you have to get the selling price for the other 20,000 units. I am giving you the way, I am showing you all the way, try to get the answer. Listen to me, tell me few things whenever I ask. How much profit does he want in this year? 167,300. Add fixed cost. Listen, you have been given fixed cost of the last year. There is some change in that also. Do those particular changes, get the fixed cost of this year. Profit plus fixed cost in this particular case will be giving you what your contribution. Is that all okay?
Yes, sir.
Let's do one thing. Whatever I am trying to tell you now, this you all put in fair only. The numbers that are required, you all try to be computing. They'll be far better. You all write down. Calculation of the selling price. For 20,000 units of the offer. Write down. Profit add fixed cost will be fetching you all contribution. Now add variable cost. Listen, you have the variable cost of the last year, but I don't want of the last year. This year there are some changes. Do those changes. Tell me one thing, variable cost will get incurred for how many units in this year?
20,000.
80. Beta, this is total income statement, no? So therefore we are talking of 80,000 units. This will give you sales. Can we say this figure will be sales of 80,000 units, no?
Yes, sir.
But there will be two parts of this. In this, there will be sales of 60,000 units. At what price, beta?
14.3.
14.3. You can write down this answer in any case. Tell me this answer also and you will write it. 8,58,000. This will give you balance sales. This sales you have to be earning from how many units here? 20,000. This will give you minimum selling price. I want this particular answer. So I think so. You basically have only two jobs to do. And that is nothing but get both the orange figures. The moment you do that, it is only calculation that is left. You have last year's data, try to get current year's data, your job should be over. I give you all 5 minutes Try to get me the answer. Now do everything in rough only. Somebody got 11.4 or something, 4.3, something like that.
7.5, 4.7.
Yeah, you took direct material and direct labor ulta. Check properly.
Yes, sir. 11.4.
That is what I'm telling you. You took direct material and direct labor ulta.
395.
Yeah. Yeah.
$15.395.
11.2975 should be your answer. Calculation of, write down please. Fixed cost per annum and variable cost per unit for current year. Now expenses last year current year. Fixed cost, variable cost per unit, fixed cost, variable cost per unit. So expenses, direct material. Last year was 3.50. This year 3.50 plus 6%. Don't do silly mistakes in life. Direct labor 1.25. Obviously it's variable. 1.25 plus 8%. 1.35. Works overheads. Now 3.125 is fixed. See where I am writing, right over there only. 3.125 is variable. Tell me, this 3.125 was based upon how many units? 60,000. So therefore this part was 187,500. That is increased by 10%. Is it 206,250? I'm not sure. Just let me know.
Yes, sir.
Please do same thing with sales overheads also. 25% is variable, 0.2. So 0.6 is fixed. That was based upon 60,000 units, 36,000. 36,000 increases by 10%. 39,600. Get both these figures, put that in the above table, finish off your answer please. Once you get 11.2975, do let me know.
So why is not getting work overhead and sales overhead in current year's variable cost?
They will be coming na beta, no changes, so therefore it will remain same only. Take it. What's the total beta? 245, 850. The other one? 8.385. Done? Done?
Yes, sir.
11.2975, everybody should get beta. Now, job done. Just trying to be reading what I have written in shorts over here. Whenever fixed cost is given per unit, it must be absorption rate. Through absorption rate, try to work out the fixed cost of the company by doing BLA into absorption rate. So that's what I guess we did over here. That's what we did over here. This is fixed cost. It might be of some use. For fixed cost, try to get it for the period. Whereas variable cost, try to get it for per unit. It will make your thinking better. So that is whatever I told you in the last question also. Try to get fixed cost for the year. Try to get variable cost in this particular case per unit as such. Okay, job done. Your next question slightly similar to one of the questions that we all have done today, not very big one. Now questions under this chapter will always be very small. In exams also, like they will not be asked for very high marks, say 6 marks. Those guys can be asking 2 different questions. And honestly, a 6 marks question will take that much amount of time only, 6 minutes only, should not be taking more than that as such. So this chapter will help you to save good amount of time also in exams. Let's do that. PQR Limited has furnished the following data for 2 years. What data? 2022. They give you sales. They give you PV ratio. Margin of safety as a percentage of sales. So if 8 lakh rupees is sales, its 40% is nothing but margin of safety. Okay, further. There has been substantial savings in fixed costs for the year 2023 due to manufacturing process, due to restructuring process. So one thing, those guys are themselves saying that in 2023 fixed cost will be saved. So therefore, can we say out of 3 assumptions, one of the assumptions now is not met. Can you say fixed cost will be changing? No, those guys have told no.
Yes.
Okay, further. The company could maintain its sales quantity level of 2022 in 2023 by reducing the selling price. So can we say selling price has also changed, no? But those guys have told that quantity has remained same only. So therefore, whatever was a quantity in 2022, in 2023, quantity has changed for, the quantity could be maintained, but selling price in this case have fallen. Tell me, in this particular year, PV ratio was 50%. PV ratio had to change because selling price is changing, no?
Yes, sir.
If selling price changes, PV ratio also changes. You are required to calculate the following. Sales for 2023 in value. Fine. Fixed cost for 2023 in value. In value matlab rupees yaar. So in any case fixed cost you will get in rupees only. Break even sales for 2023 in value. Let's start to be doing it. Should not be a very tough question. Listen. Write down please. Question number 14. Income statement. Almost from here only I will get you all the entire thing that we all want. 2022, 2023. Just keep a good gap between them. Sales 8 lakhs. Just leave one line in case we require. Let's do one thing. Either you can do sales into PV ratio or you can do sales minus variable cost. Let's do sales minus variable cost. You will understand in some time why. Contribution less fixed cost. Just a sec. Below contribution also leave one line. Sorry. Below profit also leave a line. That in any case you have your full notebook also. Now do one thing for me. Try. With the help of these three informations, no, only this, nothing else. Only this much amount of data. Complete the income statement of 2022. You complete all these numbers. I want to be seeing which people can be completed. Only that much amount of data. Nothing else to be read, nothing else to be written. First of all, your PV ratio is 50%. So 8 lakhs into 50% will give you contribution. Variable cost will be 4 lakhs. Further, margin of safety as a percentage of total sales. Now please don't write. Can we say if I'll be doing 8 lakhs into 40%, this will give you margin of safety, but margin of safety does not mean profit, beta. Margin of safety, sales above break-even sales. So therefore, whatever I have written in red till now, this will give you margin of safety. But can somebody complete?
It should be above break-even point.
That is okay. Something more? Can we say contribution earned on margin of safety is equal to profit? No. Beta, margin of safety into PV ratio will give you profit. No.
Yes, sir.
What nonsense mean? You did sales into 40%. That gave you margin of safety. No. Now margin of safety, if I multiply by PV ratio, you will start to be getting your profits. No. So therefore, this is margin of safety. This is margin of safety. Okay. So margin of safety into 50%. This will give you profit. So fixed cost should be your balancing figure 2,40,000. Now try. I have honestly done 50% of your work because you did not do it. Now read these 2 lines only, boss, and remember your basics. I give you 2 minutes only. Get me 2023 income statement. Think and do it. I give you chalo 3 minutes. Think properly. Everything you know. In fact, you can solve the entire chapter also by yourself. But provided you will think. Cartoons, you. So somebody got sales?
Yes.
Okay, sales is how much?
6,40,000.
Now one thing, see. Now for 2000, just a sec, yeah, see. All these things are still okay. But to implement this 37.5, no, and to implement this, I require some number over here. Tell me one thing, has fixed cost remained same? Yes or no? No. So therefore, this particular thing is not 2,40,000. So I cannot be writing it. Can we say in 8 lakhs, there is quantity and there is selling price. Beta, quantity has remained same, but selling price has changed. So sales will change, no? So even this figure I cannot be copying. But now you all speak further. If you have got it, then you can speak. But variable cost will get copied. Survived will get copied. 2 reasons. First, number of units have remained same. Problem has only told you that. Correct?
Yes, sir.
Second, and can we say by default if nothing is told? Please complete. Variable cost per unit will remain constant. Okay, so in any particular case, this 4 lakhs can be getting copied. Once you can think of this, then actually it's quite easy. My job is done. I'm writing 100 over here. PV ratio is 37.5%. So this is 37.5. So this figure will be 62.5. Please cross multiply. Get me sales. 6,40,000. So this figure will be 2,40,000. And now whatever I have done over here, same thing I'm going to be doing over here also, beta. So this will be 6,40,000 into margin of safety is 21.875% into 37.5%. So profit comes to how much, beta?
52,500.
Sorry, please repeat. 52,500. So fixed cost has come to, balancing figure is how much? 187,500. Let's see the required part. Have we answered everything? Let's write it. No, that'll be far better. Second, fixed cost for 2023 in value. Fixed cost break even sales. I know break even sales here. It's fixed cost divided by PV ratio. Fixed cost is 187,500. PV ratio is 37.5%. Get this answer. How much, beta? 5 lakhs. Now, next question, no, I love the maximum only because of its size actually. Question number 16. Now, I want somebody to try to get me this answer. Brilliant question, easy question, but brilliant question. A company has PV ratio of 40%. compute by what percentage must sales be increased to offset 20% reduction in selling price? I'm not going to be explaining it also, because if I explain, I'll almost say the answer, which I don't want to be doing. I'm giving you all 4 minutes. Get me this answer. First of all, try to understand what the question is saying. Once you get that, then in that case, try to be thinking. 2 lines question might be 5 lines answer.
So 25%?
No. I'm giving you last 19 seconds only. Sorry, repeat it once. You can tell me by how much will quantity sold rise?
25%.
No. Finish. Your time is over. Listen. We have PV ratio of 40%. Now just wait. Don't write till the time I will finish, please. Listen. So this is, I'll write down current. Okay. Sales. Don't write, please. Less variable cost will give you contribution. Okay. Now in this entire question, no, I have no numbers, no absolute numbers. You only have percentages. So I'll take any number. You can take any number, answer will be same only. Suppose let current sales be 100. Okay. This is, I'll say total. Now I want to be assuming any damn breakup of it. Any particular breakup. Whatever you want in an answer will be same only.
10 into 10.
So I'll not take 10 into 10, else I'll not be able to speak. Okay, so I'll take 2 numbers, say 100 into 1. So anything is okay for me. Okay. So currently say that we are selling 100 units at the rate of 1. So I'm getting sales of 100. You want to be taking this also, I'm all fine. So that's not a problem. Okay, anything is all fine here. Currently your PV ratio is 40%. Okay. So therefore this figure will be 400. So therefore this figure will be 600. Okay. Obviously quantity I'll be taking that as 100 only, you know. So therefore this is 6, this is 4. Okay. This is current data with you. Now those guys are telling you what? Compute by what percentage sales must be increased to offset 20% reduction in selling price. So therefore, I'm writing over here new. I'm writing over here quantity. I'm writing over here rate. I'm writing over here total. Now quantity might require a change here. I don't know that. But one thing, those guys have told you, selling price will be reduced by 10%. So therefore, by 20%. So therefore, it was 10 rupees first. I've made it 8 rupees, 20% falling. Okay. Now, there's only one thing that should strike you actually. Tell me, selling price has changed. Have they told anything about the variable cost?
No, sir.
No. So therefore, variable cost will remain 6 only. Can you say every unit now you'll be earning $2?
Yes.
Okay. Last. Now, see. I want this figure as a balancing figure. So obviously I require quantity. But beta quantity I can't copy, no. Quantity I can't copy here, obviously, because sales is changing. So obviously in that even quantity might be changing. See. What those guys are saying, this is our current status. By how much your sales shall be increased to offset 20% reduction in selling price. Offset means, tell me, what is the current contribution that you are earning?
400.
400. Obviously, even if price reduces by 20%, no, I still want to be earning same amount of contribution. This particular figure will remain same only. I'm asking you all, did you all understand this? Why?
Yes, sir.
Those guys are saying this particular thing, that now selling price is going to be reducing. Okay. By how much should sales be getting increased so that the offset in selling price is compensated. See, your selling price is falling down by 20%. So those guys are thinking, yeah, now selling price is falling, let's try to be increasing the sales. Obviously, our intention must be that we want to be earning same amount of contribution that we were earning before.
Yes.
Example, if I ever try to be saying, my costs are rising, okay, by how much should the selling price be increased so that it offsets the increase in this case of the cost. So can we say the intention must be to be earning same amount of profit, no?
Yes.
Are you all understood this? Example, my cost in this particular case suppose was 500 rupees. My selling price in this particular case was 600. I'm giving any damn numbers. Okay. So I was earning say 100. Those guys are saying now cost will increase to 550. By how much should selling price be increased so that it offsets the increase in this? So can we say if this increases by 50, if you increase this particular thing also by 50, you'll be earning the same amount, no, as such. Okay. So that's what I'm going to be doing right now. So therefore 400 I copied. The moment you copy 400, it is all over. I want to be earning 400 rupees of contribution. Every unit is going to be getting me rupees too. So can we say I will be earning 200 rupees? Sorry, I will be selling 200 units. Is that all okay?
Yes.
So 200 I get it, 200 I get it, 200 I get it, 200 into 8, 1600, 200 into 6, 1200. And lastly, now you all try to be seeing. Listen. What I have done, I took any figure over here. This was my starting point, okay. Then I assume that breakup of 1000 is 100 into 10. You can assume any breakup, it will be all same only. Obviously, I had my PV ratio, so therefore this was the fourth one. Quantity 2, so therefore I copied that particular thing. This was supposed to be my balancing figure 5th, this is 6th, and this was, you can call this particular thing also as 4 only here, because this 40%, this also will be 40% only. Okay, so therefore this was supposed to be my balancing figure. Say 6 over here. Okay, I'm just trying to write down the order in which I have gone. Then what did I do? I wrote down this particular number, 20% fall. Then in that case, this I copied same only. So therefore this was my balancing figure. This I copied same. Once I did this, this was 11, this was 11, this was 11, and then this was say 12, this was say 12, or this was say 13 over here. So I've gone in this particular order. Okay. Lastly, those guys had asked me what? By what percentage must sales be increased to offset 20% increase in selling price? So can we say, if you talk of sales in terms of rupees, can we say my sales in terms of rupees has to be increasing by 60%?
Yes.
Okay, or somebody can always be disputing this, or where have they asked sales in rupees? You answer the other thing also. Can we say sales in terms of units has to be increasing in this particular case by 100%, no?
Yes.
Okay, so I'm going to be answering both the things. Okay, you all do one thing, in your notebooks you all write down. Let the current sales quantity be 100 units. In bracket, write down any number. And let the selling price be rupees 10. In bracket, write down any number. Full stop. Therefore, current sales is equal to 100 units into 10 is equal to 1000. Complete this question, please. Write down those numbers. So figures in red, they tell you the order in which I have gone. I'm writing that particular thing. You try to write down however you all want to be writing. Figures in red demonstrate the order in which we have got the numbers. That number or what?
Yes, sir, in red.
It is 12, I think. 12. This is 12s. Against 1600, it's 12. Done, beta? Okay. Question 17. Now, we are going to be doing this question. We are going to be again doing this question in CA final. In CA final, I will repeat this answer first of question number 17. Then I'll tell you that it is a very inferior answer. Then in CA final, we'll try to see the real answer of such questions. Okay. But all those concepts I cannot try to tell you at CA Inter. It doesn't even form part of your portion. So, the memories of this you will carry in CA final. Then we'll try to study how wrong was your answer. Let's do the things. Question number 17. Mirinda Limited makes only one product. Sold 10,000 units of the product, making a loss of rupees 10,000. Okay. Further, in this particular case, the variable cost per unit of the product is rupees 8 and the fixed cost is rupees 30,000. Company has estimated its sales demand is under. These are third question on probability. We all have done 2 questions in material costing. In probability, these are third question in your entire book. Sales in units. So, you will be able to sell 10,000 units. Its probability is what? 0.10. You will be able to sell 12,000. Probability is how much? 0.15. 14, 16, 18. Probability is this, this and this. Can you see if you total up all these particular things, probability always totals up to 1, no? Further.
Yes. Yes.
What is the probability that company will continue to make losses? Okay. I don't want to be reading other parts. You all read till here once, then I'll ask you. You all read the question till here, please.
Answer.
Okay, listen. In part 1, no, what those guys are saying, listen. Those guys are saying this particular thing, that what is the probability that company will continue to make losses? Now, you'll have to tell me something. Tell me, when does a company make loss? I want some term. Don't tell me any number. Tell me, when does a company make loss? Yesterday, we started this section with that only.
When selling price is lower than the cost.
No. Tell me some term that we all learnt yesterday. When does a company make loss?
Fixed cost is more than.
No. Get me some term. I don't want a description. No essay writing competition. Get me some term that you all have learnt yesterday. Get me some term. From yesterday we are doing that only, beta.
Break even sale.
when obviously sales is below break-even point. Okay, so in case you want to be answering this particular question, let's start to be getting break-even point. If your sales is going to be below break-even point, company will continue to make losses. So obviously I want to be finding out break-even point to answer my first part. Now everybody will tell me this. Think. Break-even point, you have a choice. You tell me which out of the two choices will you tell me first. Sir, let's get break-even point in rupees, or sir, let's get break-even point in units. Honestly, it does not matter, but if you have to pick up one, tell me, would you like to find out break-even point in units or rupees?
Units.
As per me, units, because if you get that in units, no, you will be able to directly correlate that with this particular information. Is that understood? So I like to find out break-even point in units. Tell me, what is the formula of break-even point in units? Fixed cost divided by contribution per unit. Perfect. Fixed cost is there in first 2.5 lines. Tell me, what is the fixed cost? 30,000. Contribution per unit is also there in first 2.5 lines. Read, use your mind and tell me how much is the current contribution. 2 rupees. How does that 2 rupees come? Currently we are making a loss of 10,000. There is fixed cost of 30,000. We'll add them. Loss 10,000 plus fixed cost 30,000. So contribution that we must be earning currently is 20,000. 20,000 is a contribution we get by selling 10,000 units. So per unit you must be earning contribution of $2. Is that all okay?
Yes, sir.
So that's what we are going to be doing right now. Okay, so write down please. Write down. Calculation of contribution per unit. Loss 10,000, add fixed cost 30,000, contribution 20,000 divided by number of units 10,000. This will give you contribution per unit 2 rupees. Let's solve part 1. Write down. Company makes a loss when number of units sold are below break-even point. So, BEP in units is equal to fixed cost divided by contribution per unit is equal to 30,000 divided by 2, 15,000 units. Now, see this table. Can we say if you will be selling below 15,000 units, there will be a loss, no?
Yes, sir.
Tell me, what is the probability of you selling below 15,000? Now, calci is not required. Just see the table and tell me the answer.
0.55.
0.45, no? 0.45. You total up these particular three things. All of them are below 15,000, no? So therefore, if this happens, or this happens, in any case, there will be a loss here. So therefore, you all can write down probability is equal to 0.1 plus 0.15 plus 0.2 is equal to 0.45. Further, what is the probability that company will make a profit of 6,000 Can we say for answering all such questions, beta, you have to be seeing this particular table. Now this table you can only see if you get the units, no? Else how the hell you're going to be seeing this table, correct, no?
Yes.
So first thing is we just try to be thinking that if you want a profit of 6,000, no, how many units you will have to sell. You understood my objective?
Yes, sir.
Okay, so let's try to get number of units first. Okay, so therefore how much profit these guys want? 6,000. But you don't earn profit in life, you earn contribution. So to reach till contribution, what do I add? Fixed cost. So 30,000. So contribution will be 36,000. Divided by, now 36,000 you want to be earning in totality, beta. Every unit is going to be giving you $2. 18,000 units. Now tell me, what is the probability that you will get a profit of 6,000? Means, what is the probability that you will sell 18,000 units? What is the probability? 0.25. Part third. Further. What is the probability that company will make a profit of at least 2,000? Now, let's skip that word at least for 1 minute only. Okay? So, what is the probability that company will make a profit of at least 2,000? Let's talk of 2,000 for the timing. We'll bring that word also. Okay. So, exactly prepare this statement, but the profit that we all want now is 2,000. Please start. Instead of 6,000, we all want profit of 2,000. So, put this 2,000 over here. Get your answer first.
$16,000.
But that word is there, no? At least. So can we say if you sell exactly 16,000 units, you will get exact profit of 2. But I want at least profit of 2. Can you say at least means 2 or more, no?
Yes.
So therefore, can we say you have to sell either 16 or 18? So above 16. So therefore, your answer will be 0.55, no? 0.3 plus 0.25. Further, what is the probability that company will make a profit of at most 2? Now nothing is to be computed. Can you say at most means 2,000 should be the max profit, no? So therefore you should be selling 16,000 units or anything lower than that, no?
Yes.
So therefore answer will be total of all these particular things. Is that all okay?
Yes.
Although I'll present one more view in just a while, but I'll have this particular answer. You can directly write down the probability. So probability will be 0.1 plus 0.15 plus 0.2 plus 0.3 is equal to 0.75. Now my interpretation for this particular part 4 was what? Either you earn a profit of 2,000 or anything lesser than that will do, because we want to be earning max profit of 2,000. So therefore I included this also and this also. Although some people can be saying no sir, you interpreted it wrong. They want a profit only, sir. It should be profit only. Although the max profit should be 2,000. If you interpret like this, then only this figure will become your answer. Did you all understand what did I say? Because anything lower than 15 will give you a loss, no?
Yes, sir.
So I don't know how to interpret this particular line. Okay, I interpreted it as that I want max profit of 2 means 2000 or anything lower than that. Anything lower than that means loss is also covered.
Yes, sir.
If somebody says no sir, loss, no sir, the interpretation of this particular line should be we want to be earning maximum profit of 2000 means there should be profit, but the max profit should be 2000. In that case, answer will be 0.3. Is that understood?
Yes, sir. Yes,
Everyone, is that understood?
Yes.
Okay, so I'm writing over here to clarify myself, assuming loss is also covered. Okay, listen. Now, question number 18, no, I don't intend to solve it fully. I want to prepare some summary for you and I want to give you all something to try at home. Okay, so bear with me for that particular part. Only I'm trying to prepare a summary and nothing else. But in that summary, part A will automatically get solved. But this question is all about part B basically. Okay, let's read it. Ever Forwards Limited is manufacturing and selling 2 products, Splash and Flash, at selling price of 3 and 4 respectively. The following sales strategy has been outlined for the year 2023. Okay. So this is a sales strategy for 2023 beta. Sales planned for the year will be 7.2 lakhs in case of Splash and 3.5 lakhs in case of Flash. Okay. Further, to meet the competition, selling price of Splash and Flash will be reduced by 20% and of Flash by 12.5%. Break even is planned at 60% of total sales of each product. Read this point very properly. Profit for the year to be achieved is planned at 69,120 in case of Splash and 17,500 in case of Flash. This would be possible, means this profit will be possible by launching a cost reduction program. Okay, and reducing present annual fixed cost, underline the word present annual fixed cost, of rupees 1,35,000, allocated 1,08,000 to Splash and 27,000 to Flash. Okay, you are required to present the proposal in financial terms, giving clearly the following information. A, number of units to be sold of Splash and Flash to break even, as well as total number of units of Splash and Flash to be sold during the year. B, reduction in fixed expenses product wise that is envisaged by the cost reduction program. Okay, I'll present the summary of that. After that, part A will automatically get solved. Part B, something you'll have to try that thing at home. Obviously, we'll solve it tomorrow. But without me preparing the summary, no, it'll be hard for you all to be understanding the question also. Okay, so write down please question number 18. Write down summary. You have 2 products, I'm writing their names. Splash, Flash. Now see. Ever Forwards Limited is manufacturing selling 2 products, Splash and Flash, at selling price of 3 and 4. The following sales strategy has been outlined for the year 2023. Now see. Those guys tell in point 2. Those guys tell you in part 2 that selling prices will be reduced in 2023. So I think this particular data must be of 2022 because in 2023 we will be reducing the selling prices. Is that okay? Yes. So current year in this particular case must be 2022. We are trying to plan something for the year 2023. So write down over here 2022. Selling price is 3, selling price is 4. Leave 2 lines, write down 2023. In 2023, what are we planning? Sales, we are planning this much and this much. So write down sales in rupees 7,20,000, 3,50,000. Further, to meet the competition, selling prices of Splash will be reduced by 20%, that of Flash by 12.5%. So write down selling prices. Reduce the selling price please by 20 and 12.5% and write down the new selling prices over here. Get me the new prices please. 2.4 and 3.5. Further, break even is planned at 60% of total sales of each product. So write down break even sales. Whatever is this figure, break even will be 60% of that. Okay, so you can take their 60% break even sales. Get me the 60% please. Four lakh 32 is correct?
Yes, sir.
Other figure? 2 lakh 10,000. Further, profit for the year to be achieved is planned at this much for splash and this much for flash. So you all can write down profit. Further, now see, this is the final line. This would be possible, means this profit will be possible by launching a cost reduction program and reducing present annual fixed cost of 1,35,000, allocated this one to flash, this one to flash. Present annual fixed cost means fixed cost of which particular year? 22. So current fixed cost is 1,35,000, whose breakup we have. So therefore I am going to be writing breakup only beta. 1,08,000 and 27,000. In 2023, in fact, our fixed cost will be reduced. That is whatever you have to find out in part 2 of the question. Now see, last part. You are required to prepare the proposal in financial terms, giving clearly the following information. A part I am solving for you. Number of units to be sold of splash and flash to break even. Tell me, you have break even point in rupees, but those guys want number of units to break even. So tell me, number of units to break even means break even point in units. No, that will be nothing but 4,32,000. Speak further. Divide by your selling price. I'll give you break even point in units. No?
Yes.
Okay, so write down over here, please. Part A, BEP in units is equal to break even sales divided by selling price. That comes to how much, beta?
1,80,000.
1,80,000 and here 60,000. There is one other part also, as well as total number of units of splash and flash to be sold during the year. Tell me, total number of units of splash to be sold in 2023 will be what upon what?
7,20,000 upon 2.4.
7,20,000 upon 2.4, no? Sales upon selling price. Number of units to be sold is equal to sales upon selling price. So 7,20,000 upon 2.4, I guess should be 3 lakh units, and this should be 1 lakh units. Now, I am just explaining you what is required in part B, and nothing you all require from the question. I have given you all the summary of the entire question, so nothing is now required from the question only. I am just trying to tell you part B. Reduction in fixed expenses product wise means separately for flash, separately for splash. That is envisaged by the cost reduction program. Those guys want reduction in fixed cost. You all have your current fixed cost. Try to get this new fixed cost. They want the reduction in fixed cost. You understood the objective?
Yes, sir.
Now, nothing you will require the question for. Whatever you will require is all present in your notebooks only. You just have to try to apply whatever we all have learned since yesterday. Okay. Fixed cost has to be reduced by how much, beta?
4,320.
Yep. And the other one 750. Okay. Now we'll start. I don't need to read up the question because whatever data is there in the question, we all had put that in the summary only. Now I can do this question by n number of ways. Let me try to show you, say by 2 or 3 ways, whatever you'll prefer. I'll show you say by 2 ways or by 3 ways. I'll show you for splash, whatever you wish. You can try the same thing for flash. Okay, listen. I'm just trying to see whatever data I have with me right now. So therefore, what data I have? 2022, I have my selling price 3 rupees. I have my fixed cost, that is 1,08,000. 2023, I have my sales, I have my selling price, I have my break-even sales, I have profit, and I got to be finding out fixed cost. Okay, so therefore, once you get fixed cost, current fixed cost is this much. In the next year, it has to be reduced to this much. I want how much it should be reduced. So therefore, I want that difference as such. Okay. So my entire focus is only on one thing. Try to get your fixed cost. Now, how to be getting your fixed cost? I try to think in terms of income statement. Please don't write. In terms of income statement, sales. Tell me, do you all have sales of splash with you? Do you all have sales of splash with you? Yes. So therefore, that figure is 7,20,000. But of course, from where the hell you get your variable cost? We don't have our variable cost of 2023. Then somebody can be thinking, sir, our assumption, it is not changing. Correct. But then I want variable cost of the last year. Even that particular thing is not there. So I cannot get contribution. Okay. Fixed cost, I obviously want as a balancing figure. Okay. Profit I have with me. So therefore, I cannot be completing because I don't have variable cost. Sir, can I do like this? Sales into PV ratio will fetch you contribution. Obviously, you can. But then again, you will require PV ratio. Do you have PV ratio with you? No, PV ratio is contribution upon sales into 100 beta. You don't have contribution. That is whatever is the problem, no? Okay, so then what to do, then what to do, then what to do? Okay, somehow I'm trying to be arranging for PV ratio. See, once you will get your PV ratio, question will get solved. Correct, no? So you want your PV ratio. Okay, so from where to get your PV ratio? So one thing, sales into PV ratio will give you contribution. We all know that. But I don't have contribution. That is the problem. Sales is in 2 parts. Which 2 parts? You have break-even sales and then you have margin of safety. Okay. Break-even sales into PV ratio gives you enough contribution to meet your fixed cost. Whatever is the balance sales, on that, whatever contribution you earn at the rate of PV ratio becomes your profit because fixed cost has already been met. Okay. I can get fixed cost like this also. Break-even sales into PV ratio will fetch you your fixed cost. Tell me one thing, do you all have break-even sales with you?
Yes.
4,32,000. But again, the problem is same only here. You still want PV ratio. How to be getting the PV ratio? I'll try to arrange PV ratio from here. Might be. Let's see. PV ratio, can we say it will be profit upon margin of safety? Tell me one thing. Do you all have profit with you?
Yes.
Yes. Tell me one thing. Can you get margin of safety for me?
Yes, sir.
Yes. Margin of safety, sales above break-even sales. You have sales with you. You have break-even sales with you. Okay. Difference will be nothing but margin of safety. Once you get margin of safety, you will be able to strike your PV ratio. Once you get your PV ratio, you can apply that PV ratio over here. You will directly start to be getting your fixed cost. Is that all okay?
Yes.
I am planning to be doing that particular thing only. So let's do in that particular way. You all write down for splash. I am telling you 2 or 3 options. You can write down all of them. Okay. So you can write down PV ratio is equal to profit divided by margin of safety, obviously in rupees, into 100. $69,120 divided by. Tell me, margin of safety is how much? 2,80,000. It's sales above break-even sales. So out of 7,32,000, sorry, out of 7,20,000, 4,32,000 was supposed to be your break-even sales. So rest will be your margin of safety. So this particular thing will be nothing but, so how much percent beta?
24.
24%. Now, once you have your PV ratio, actually question is all solved only. You want your fixed cost, no? Okay. This into this will give you your fixed cost. Fixed cost is equal to break-even sales into PV ratio. So, 4,32,000 into 24% is equal to 103,680. Job done. Now, if for any reason we don't want to be doing this, let me tell you a second method, but I'll let this thing remain. I might require it. Okay, second method. Second method in this particular case might be your second table that we all had made. Instead of expressing sales in terms of rupees, we can express it in terms of units. Number of units sold, don't write, into contribution per unit will give you total contribution. Okay. Now, number of units sold will be in two parts. Which two parts? Break-even point, margin of safety, obviously expressed in terms of units. Whenever you sell your product, you earn contribution. Whenever you sell your product, you earn contribution. But on break-even point, you earn enough contribution, obviously, to meet your fixed cost. On remaining, whatever you will be getting, there will be nothing but your profit. You want this particular data. For that, you want break-even point in units, contribution per unit. Everybody will tell me, do you all have break-even point in units?
Yes, sir.
That is how much?
3 lakh.
Break-even point. Beta 1,80,000, no, I guess? 1,80,000. Now you want contribution per unit. So from where to get contribution per unit? From here, beta. You have 69,120 as profit. Margin of safety, can you all get it? It will be 1,20,000. Out of 3 lakh units, 1,80,000 is your break-even point. Okay, remaining 1,20,000 units will be nothing but your margin of safety. You have this, you have this. Get your contribution per unit, apply that over here, start to be getting this. That's what I'm going to be writing right now. So, first we are supposed to be getting this data. So, write down. Contribution per unit is equal to profit divided by margin of safety in units. $69,120 divided by margin of safety 1,20,000. Don't multiply by 100 please. We are just trying to find out contribution per unit. This comes to how much? Rupees, how much beta? 0.76 per unit. Job done. Fixed cost is equal to break-even point into contribution per unit. So 1,80,000 into 0.576 is equal to 103,680. Now see, I'm telling you one weird way, but I'm not going to be giving that thing in writing, okay? But I'll tell you for sure. Just like, you know, to tell you all, if you all think in a rational way, no, you'll get every answer here. You might do our way or you might not do our way. But listen, see, your aim is to be getting fixed cost, no? Okay. Sales, out of that 60% is break-even sales. So 40% is margin of safety. Is that okay?
Yes, sir.
Okay, now see, break-even sales is also multiplied by PV ratio. Margin of safety is also multiplied by PV ratio. You all will understand. If two terms are multiplied by the same constant, no, then in that case, the ratio of 60-40 will not be applicable only over here. It will also be applicable over here because both of them are multiplied by the same constant. Is it understood? So therefore, fixed cost and profit will be in what ratio beta? 60-40. My job is all done. The sum is all over. Fixed cost divided by profit will be in the ratio of 60:40. I guess profit you all have with you. Your profit is 69,120. Calculate your fixed cost. That will be 103,680. Just try on a calci. Okay, you can do like that also. Any method is all okay. Okay, I can tell you 10 other methods also, to be very honest, but I'm not having any intention to be doing that. Let's record our 2 answers that we all have done. Just the final thing I'm trying to be doing right now. Write down reduction in fixed cost. So last year it was 1,08,000. This year it is 103,680. So therefore rupees 4,320. I have done 2 methods for splash. I want that you solve by both those methods for flash also. Please do that. Answer will be 750. Once you get it, that's it. Done, beta? Their PV ratio comes to how much? PV ratio.
12.5.
12.5%. Okay, and the reduction in fixed cost will be 750 rupees.